Most people are waiting for a headline to tell them when XRP is about to move, and that is exactly why they will miss it. Because price explosions in financial markets do not begin with headlines, they begin with silence. And right now, XRP is sitting in one of the quietest and most misunderstood phases it has ever been. And not because nothing is happening, but because what is happening, where most people are not looking. This video is not about hype, it is not about promises, and it is not about a sudden announcement. It is about pressure building inside a system that can no longer afford inefficiency, and why XRP is directly connected to that pressure, whether the market is paying attention or not. If you have felt confused, frustrated, or simply bored holding XRP, this is the conversation you were missing, because boredom in markets is rarely accidental. It is usually a sign that positioning is already underway, and positioning always comes before repricing before we go any further. Let me be clear. This is not financial advice, and this is not a call to action. This is an explanation of why price behavior sometimes looks disconnected from reality until it suddenly is not, and why the price of XRP is approaching a moment where the old assumptions no longer fit the system that is now forming around it. Markets do not explode because people get excited. They explode because something breaks under pressure, and that pressure has been building quietly for a long time now. To understand why no one is talking about this, you need to understand how most people are trained to observe markets. They watch charts, they follow influencers, they react to news, but infrastructure does not announce itself. Infrastructure evolves silently until it becomes unavoidable, and XRP is an infrastructure asset first and a market asset second. And that distinction changes everything, because infrastructure assets are not priced by sentiment. They are priced by necessity, and necessity does not care whether people believe or doubt. It arrives when systems reach their limits, and global finance is reaching limits across settlement speed, liquidity, fragmentation, compliance cost, and cross-border friction. And these are not theoretical problems. They are operational ones being dealt with every single day by institutions that cannot afford delays, errors, or inefficiencies. And when those institutions look for solutions, they do not look for hype. They look for reliability, scalability, and neutrality. And that is the environment XRP was designed for. And that environment is no longer future tense. It is present tense. The reason price has not reflected this yet is because markets lag infrastructure by design. The people building the system move first. The people trading the asset move later, and the crowd moves last. And we are currently in the gap between the first and second group, where activity is real, but recognition is low. And this gap is where the largest repricing events originate, because once recognition catches up to reality, the adjustment is rarely smooth. Think back to every major shift in finance: the rise of electronic trading, digital payments, cloud infrastructure. None of these were celebrated at the moment. They became essential. They were ignored until suddenly they were everywhere, and the repricing of the assets tied to those systems happened not gradually, but decisively. And XRP is following a similar pattern, not because history repeats exactly, but because systems behave consistently under pressure, and pressure creates urgency. Urgency forces adoption, and adoption forces repricing. This is why the current focus on short-term price movements misses the point entirely, because the real question is not why has XRP not moved, yet the real question is how long can the system continue operating with XRP priced as if it is optional when it is increasingly being positioned as functional. Because functionality at scale requires certain thresholds of liquidity, stability, and value density. And if those thresholds are not met, the system compensates by adjusting price, not sentiment. And this adjustment does not require retail enthusiasm. It requires institutional necessity. And that necessity is becoming clearer as more payment corridors, more liquidity hubs, and more regulatory clarity converge. And this convergence is not loud. It is methodical, and that is exactly why it is being ignored by most observers. And this ignorance is not malicious, it is structural. People pay attention to what moves, not to what prepares. And XRP has been preparing for a long time. Now the preparation phase feels unrewarding because it does not provide emotional feedback, but emotional feedback is not how systems evolve. Systems evolve through alignment, and alignment is what we are beginning to see across multiple dimensions: liquidity behavior, regulatory posture, and institutional engagement. And when these dimensions align, price behavior eventually changes to reflect that alignment, not because of speculation, but because the old pricing no longer supports the new role, and roles dictate value, not opinions. So when we say the price of XRP is about to explode, what we really mean is that the current price is becoming increasingly incompatible with the system that is forming around it. And incompatibility in markets is resolved through repricing, and repricing is rarely polite. It is abrupt because the market must catch up to reality quickly once the gap becomes too large, and that is where we are now. Not at the moment of explosion, but at the moment where the pressure behind it becomes undeniable, and understanding that difference is what separates those who are surprised from those who are prepared. And in the next part, we are going to break down exactly where this pressure is coming from, how liquidity mechanics supply behavior and institutional constraints are converging, and why the silence around XRP right now is not weakness, but compression. And compression does not last forever, it resolves, and when it does, it rarely gives advance notice. To understand where this pressure is really coming from, we need to talk about liquidity, not as a buzzword, but as a mechanical requirement, because liquidity is the oxygen of financial systems, and when oxygen becomes scarce, systems suffocate slowly at first, and then suddenly global liquidity today is not disappearing, but it is fragmenting, and fragmentation is far more dangerous than scarcity, because fragmented liquidity creates delays, mismatches, and hidden costs that compound over time, and legacy systems were never designed to operate efficiently under fragmented conditions. They rely on intermediaries, reconciliation windows, and trust assumptions that no longer scale in a 24-hour global economy. This is where XRP enters not as a speculative asset, but as a neutral settlement layer capable of moving value instantly between systems that do not share trust. And when fragmentation increases, the value of neutral bridges increases exponentially, not linearly, because every additional connection multiplies complexity, and bridges reduce that complexity. And complexity reduction is worth paying for. Institutions do not care about narratives. They care about reducing operational risk and cost. And right now, operational risk is increasing, not decreasing, which is why solutions that can reduce it quietly gain importance. Another factor amplifying this pressure is capital efficiency. Institutions are being forced to do more with less, hold less idle capital, manage tighter balance sheets, and reduce exposure to settlement delays. Trapped. Capital is expensive in a high-rate environment, and traditional correspondent banking traps capital by design because funds sit idle waiting to clear. This inefficiency was tolerated when rates were low, but tolerance disappears when capital has a cost, and that cost is now very real. XRP-based settlement reduces the need for pre-funding, and that is not a theoretical benefit. It is a measurable financial advantage, and measurable advantages eventually get adopted regardless of sentiment because they directly impact profitability and risk management. And when adoption increases, demand for the asset facilitating that settlement increases as well. But here is where most people get confused. They assume increased demand automatically means visible price movement, but that is not how infrastructure adoption works. At first, increased demand is absorbed quietly by existing supply and market makers because the system is testing capacity, not advertising it. This creates a lag where usage increases, but price remains muted, and that lag fools observers into thinking nothing is happening, when in reality the system is stress testing itself, and stress testing precedes scale, and scale precedes repricing. Another signal worth paying attention to is how supply behaves during this phase when an asset is transitioning from speculative to functional. Long-term holders become less sensitive to short-term price movements because they understand the role shift. This reduces reactive selling and creates a tighter supply environment. Even without hype-tight supply, combined with rising utility demand, creates asymmetry, meaning small changes in demand can produce outsized price reactions once the system crosses a threshold, and thresholds are not visible on charts. They are crossed when internal limits are reached, such as settlement capacity, liquidity, provisioning efficiency, or risk tolerance. And once crossed, the response is not gradual, it is decisive, because systems cannot operate beyond their limits for long. This is why price explosions feel sudden. They are not driven by emotion, but by constraint resolution, and XRP is increasingly tied to constraints that are tightening across global finance. Another overlooked element is regulatory clarity, not in the sense of everyone agreeing, but in the sense of institutions knowing how to operate without fear of retroactive punishment, uncertainty, delays, adoption, clarity, accelerates it. And while regulation remains complex, the direction of travel is becoming clearer. And institutions do not need perfection, they need predictability. Once predictability improves, engagement increases quietly, first, then visibly later, and this creates another lag between action and recognition. And during that lag, markets appear disconnected from reality until the adjustment occurs, and the adjustment always overshoots because markets are not precision instruments. They swing past equilibrium before settling, and this overshoot is what people remember as explosions. Even though it is simply the system correcting accumulated mispricing, this brings us back to why no one is talking about this, because it is not exciting to explain liquidity mechanics, capital efficiency, regulatory thresholds, and settlement constraints. These topics do not trend, they do not go viral, but they move trillions, and the assets connected to them eventually reflect that movement. And XRP is deeply connected to these mechanics in a way few digital assets are, and that connection is strengthening, not weakening, and strengthening connections increase dependency. And dependency increases value, because once a system depends on an asset, removing it becomes more costly than maintaining it, and cost determines behavior more reliably than belief. And when cost pressures align with utility solutions, markets adapt regardless of public opinion. This is the environment forming now, and it is why focusing on short-term sentiment misses the point entirely. The real story is not what people are saying, but what systems are doing, and systems right now are preparing for higher throughput, tighter margins, and faster settlement. And that preparation favors assets designed for exactly those conditions. And as that preparation transitions into execution, price behavior will change not because of hype, but because the old price no longer supports the new function. And when that happens, the adjustment is not optional, it is required. And that is why the silence around XRP right now should not be mistaken for weakness. It should be understood as compression. And compression always resolves. The only uncertainty is timing, not direction. And timing is influenced by triggers that are not public, but the conditions that make those triggers effective are increasingly visible. And that is what matters most for anyone trying to understand why the price of XRP is approaching a moment where the current calm cannot hold indefinitely. To fully grasp why moments like this precede explosive price moves, we need to look at behavior, because markets are ultimately reflections of collective behavior, constrained by rules and incentives, and right now behavior around XRP is shifting in subtle but meaningful ways. One of the clearest signals is how volatility has compressed while uncertainty remains high. This combination is rare because uncertainty usually produces volatility, not stability when volatility compresses. Despite unresolved questions, it suggests that participants are no longer reacting emotionally. They are waiting, and waiting in markets often indicates confidence, not confusion. Another behavioral signal is declining. Responsiveness to negative narratives. Stories that once triggered sharp sell-offs now produce muted reactions. This desensitization does not happen when an asset is losing relevance. It happens when holders are anchoring to longer-term structure rather than short-term noise, and anchoring reduces turnover, which reduces available supply, and reduced supply under rising structural demand creates conditions where price must eventually adjust upward to ration access. This is not speculative theory, it is observable across market history, whether in commodities, equities, or digital assets. When supply tightens quietly and demand grows gradually, the release is sudden because the market discovers imbalance all at once. Another layer of behavior worth noting is institutional patience. Institutions move slowly by design, not because they are cautious, but because their decisions carry systemic risk when they engage. They do so with redundancy testing, fallback planning, and gradual scaling, and this means their activity often looks insignificant until it reaches critical mass. At that point, it becomes visible very quickly and overwhelms retail flows because institutional capital operates at a different magnitude, and XRP is uniquely positioned to absorb that magnitude because it was designed for throughput, not scarcity theater. This design choice has been misunderstood by many who equate value with artificial scarcity rather than functional necessity. But functional necessity scales with usage, and usage at institutional level dwarfs retail participation, and this is why repricing events tied to infrastructure adoption tend to be dramatic, because the scale difference between early participation and full engagement is enormous, and markets must bridge that gap rapidly once engagement expands. Another important factor is psychological fatigue. Many retail participants have disengaged emotionally after long periods of sideways movement. This creates apathy, and apathy reduces reactive selling because participants stop watching every tick. Ironically, this disengagement creates healthier market structure because emotional excess is removed, leaving a base of participants aligned with long-term utility rather than short-term excitement, and this base provides stability. Enables accumulation, and accumulation under stability compresses price ranges. Compressed ranges do not persist indefinitely. They resolve, and resolution tends to be sharp because energy stored during compression releases quickly. This pattern repeats across asset classes, and XRP is currently exhibiting many of its characteristics without attracting attention because attention is focused elsewhere. This is often when the most significant moves originate, not when everyone is watching, but when most have stopped caring. Another overlooked element is narrative saturation. Markets cycle through narratives, and when a narrative becomes exhausted, it stops moving price, regardless of repetition. Bitcoin narratives, Ethereum narratives, memcoin narratives all experience saturation, where additional commentary produces diminishing impact. XRP exists somewhat outside these cycles, which has been perceived as a weakness but is actually an advantage because it allows structural developments to occur without being distorted by speculative excess. When a narrative is quiet, fundamentals can reassert themselves, and fundamentals are what drive long-term value allocation. And as fundamentals strengthen beneath a quiet narrative, the eventual reawakening tends to be abrupt because the gap between perception and reality has widened, and that gap must close quickly. Once recognized, this brings us to historical precedent because nothing happening now is unprecedented, even if the context is new in previous cycles. Assets tied to infrastructure adoption experienced long periods of stagnation followed by rapid repricing once adoption crossed thresholds. Examples include early internet companies, payment networks, and cloud providers. In each case, the market underestimated the speed at which necessity would force adoption and overestimated the importance of short-term sentiment. XRP fits this pattern more closely than most digital assets because its value proposition is not consumer-facing. Excitement but system-level efficiency and system-level shifts happen when constraints force them, not when marketing succeeds, and constraints are tightening now. Across multiple dimensions, settlement speed, cost compliance, and capital efficiency, these constraints do not resolve themselves. They demand solutions, and solutions that already exist gain advantage, and when that advantage becomes unavoidable, markets adjust pricing models accordingly, and that adjustment is rarely incremental because incremental changes cannot resolve systemic imbalance quickly enough. So repricing overshoots then stabilizes. This is why explosions are followed by consolidation. Not because the move was unjustified, but because the market overshot equilibrium while correcting mispricing, and this cycle may repeat again because the underlying mechanics are similar even if the participants are different. The final psychological component to consider is disbelief. Disbelief is the most consistent emotion before major repricing events because disbelief protects the ego from admitting misjudgment. People resist acknowledging that something they ignored is becoming important because it challenges their prior assumptions, and that resistance delays recognition until price forces acknowledgement, and price is very good at forcing acknowledgement quickly. This is why so many say it came out of nowhere, even though the evidence was available all along. And this is why understanding behavior matters as much as understanding mechanics, because behavior determines when recognition occurs, and recognition triggers flow, and flow moves markets. And as we approach the final part of this discussion, the key question is not whether the price of XRP will ever explode. The question is whether the current structure can persist without adjustment, and evidence increasingly suggests it cannot, and systems do not tolerate persistent imbalance. Indefinitely, they correct, and when they correct, they do so decisively and without regard for individual expectations. And that is why the quiet period we are in now deserves attention, not fear, not excitement. Attention, because attention allows preparation, and preparation is the only advantage available before recognition spreads. And once recognition spreads, the window closes, not gradually, but suddenly. As we bring everything together, the most important thing to understand is that markets do not reward those who react. They reward those who recognize alignment before it becomes obvious. The reason price explosions feel shocking is not because they are unpredictable, but because most people are not watching the right signals at the right time. They wait for confirmation in price, when confirmation always comes last. The real confirmation happens in structure, behavior, and necessity. And when those three align, price has no choice but to follow. And that is the situation XRP is moving toward now. Not because of hype, not because of promises, but because the system around it is changing faster than perception. Global finance is under pressure to move faster, cheaper, and with less friction. And that pressure does not disappear. It compounds. And when compounded pressure reaches a threshold, systems adapt quickly and decisively. XRP was designed for this exact environment, and its role is becoming more defined, not less. And definition precedes valuation, because once an asset has a clear role, it can be priced according to function rather than speculation, and functional pricing is far more powerful than narrative pricing because it is enforced by usage, not opinion. This is why the current calm should not be mistaken for stagnation. It is the quiet phase before resolution, where positioning solidifies emotional participants. Disengage and structural participants prepare. This phase is uncomfortable because it offers no immediate reward, but it is also the phase where risk is lowest for those who understand what is happening and highest for those who assume nothing will change. The idea that nothing is happening right now is itself the biggest misconception, because change is occurring quietly through liquidity channels, regulatory posture, and institutional behavior. And these changes do not reverse easily. Once set in motion, they build momentum until the system must acknowledge them. And that acknowledgement often comes through repricing that feels sudden, even though it was inevitable. The final takeaway is not that XRP will explode tomorrow or next week. It is that the conditions that lead to explosive moves are forming again, not in the same way as before, but in a way that is arguably more consequential, because the stakes are higher, the system is larger, and the need for efficiency is more urgent. Markets correct mispricing eventually, whether people are ready or not. And those corrections do not consult sentiment, they respond to constraint and necessity. And necessity is becoming the dominant force in global finance. This is why understanding the mechanics matters more than predicting the moment. Because once the moment arrives, prediction is irrelevant. Preparation determines outcome, and preparation starts with awareness. Awareness of structure, awareness of behavior, and awareness of timing cycles that operate independently of emotion. Crypto equation exists to build that awareness, not to promise outcomes, but to explain why certain outcomes become possible. And when you understand why, you are no longer surprised by what happens next. You are simply prepared for it, and preparation is the only edge that exists before recognition becomes widespread, because once recognition spreads, the opportunity shifts from understanding to reaction, and reaction is where most people lose their advantage. So as you step back from this video, ask yourself, not when will price move, but whether the current price truly reflects the role XRP is being positioned to play. And if the answer is no, then the rest becomes a matter of patience, not prediction. Because systems always resolve imbalance eventually, and when they do, it is never subtle and never comfortable for those who are not paying attention. And that is why this quiet moment deserves your attention now, before the noise returns and before the explanation becomes obvious in hindsight, but because the old price no longer supports the new function. And when that happens, the adjustment is not optional, it is required. And that is why the silence around XRP right now should not be mistaken for weakness. It should be understood as compression, and compression always resolves. The only uncertainty is timing, not direction, and timing is influenced by triggers that are not public, but the conditions that make those triggers effective are increasingly visible. And that is what matters most for anyone trying to understand why the price of XRP is approaching a moment where the current calm cannot hold indefinitely.